This week, it's time for my favorite segment, Security Money, where we update you on the latest security funding and performance of the public market. The Security Weekly 25 Index and the NASDAQ both hit all-time highs last Friday. In the leadership and communications section, in modernization, security is a barrier and an incentive. Federal CISO DeRusha maps FISMA reform priorities, cybersecurity salaries, what eight top security jobs pay, and more. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Stopping advanced threats requires knowing exactly what you're up against. ExtraHop Reveal X is the only solution that shows you not just where intruders are going, but where they've been. 90-day look back and complete network visibility across the data center, cloud, and device edge helps security teams respond 84% faster with ExtraHop Reveal X network detection and response. Explore the interactive demo at securityweekly.com/ExtraHop. We're proud to announce CISO Stories, a new podcast series in partnership with Cybersecurity Collaborative and Cybereason. CISO Stories features the candid perspectives and experiences of frontline senior security executives and dives deep into timely security topics. CISO Stories is hosted by Todd Fitzgerald, VP of Cybersecurity Strategy at Cybersecurity Collaborative, and Sam Curry, Chief Product and Security Officer at Cybereason. Listen weekly as they speak with extraordinary CISOs by visiting securityweekly.com/CSP.
Welcome to Business Security Weekly. This is episode number 225, recorded July 26, 2021. I am your host, Matt Alderman, here in Colorado. Joining me remotely are my co-hosts. First, Mr. Jason Albuquerque.
Great to be back. Sorry I couldn't be here last week. I was a little under the weather. Actually, a lot under the weather. Sorry.
You didn't have your booster shot. I don't know.
Yeah. Listen, I'm just glad it wasn't anything super bad, but it was definitely a head and chest cold that took me out for a few days.
Well, we're glad you're back. We missed you. My second co-host joining us today is Adrian Sanabria. Welcome, Adrian.
Hey, glad to see you back too, Jason. Yeah, cold like that, it's hard to work through. And this is also one of my favorite topics. I'm excited about this segment.
You, me and you put a lot of work into the segment. You just don't know you do it yet. I'll explain in a minute. Cyber Risk Alliance, in partnership with InfraGard, has launched the Critical Infrastructure Resilience Benchmark Study. Measure your readiness for ransomware by completing the survey and getting your score. Visit securityweekly.com/CIRB to take the survey. Security Weekly Unlocked will be held in person this December 5th through 8th at the Hilton Lake Buena Vista. We are excited to announce our first round of speakers: David Kennedy, Alyssa Miller, O'Shea Bowens, Marina Ciabatta, Patrick Coble, Chris Eng, Eric Escobar, Kevin Johnson, and Justin Kohler. Visit securityweekly.com/unlock to register and check out all of our rock star lineup. All right, so this segment, I was explaining it to Jason right before the show. This is one of my shortest segments we ever do on the show, but it is the longest prep time by at least a factor of 4. And here's what I do, and Adrian, I'll pull you into this because you do a lot to actually support the segment. First thing I have to do is I have to go out and get all the stock prices over the last quarter for the 25 companies that are in the Security Weekly 25 Index. Okay. Then I update all my charts. Then I have to go look at all the analyst earnings reports for last quarter, update all of those, and the analyst ratings for each of those stocks. And that's before I get to the private side of this. There, I go to Enterprise Security Weekly because you and Paul cover this pretty much every week. And I literally use our own Enterprise Security Weekly show to pull together all the private funding announcements. And there were a ton last quarter. So thank you, Adrian, for all your help.
Well, in the near future, hopefully we're going to have all this in a database. You know, we've got a really good start on it. But in the future, hopefully, Matt, this is going to be a query for you.
Nice.
Oh, I can't wait. Well, right now it's a pretty big query, and it's a Google sheet, actually. The way I pull all the pricing in is through a Google function that I have not migrated over to Excel. So I still use my original Google sheet to actually pull all these numbers every quarter. So another
automate that, Adrian. Automate that for the poor guy, would you?
Yeah, well, it's funny because I've got my own Google sheet from back when I used to be at 451. That I would use to track all the IPO data of pure play cybersecurity companies. I wouldn't include, companies like Cisco and stuff like that. It gets kind of crazy if you include anybody with any kind of cybersecurity product. But yeah, Matt, when you shared this earlier today, I dusted off that spreadsheet and updated a few things on it. So. And we've got that data in the database too. IPO data is pretty interesting to look at.
It is. So I did the same thing with the index, right? It's only the pure plays. There's 25 in the index. We had 3 IPOs this last quarter. So there's some interesting activity going on. Let's get into some of the quick numbers, right? The index closed at 2,658 and 45 cents. When I created the index over 2 years ago, I have data going back to, I think, late 2017. I set the baseline at 1,000. So that means we're up 165.85% since I created this index. That's a pretty good return over the last couple of years. Yeah. I'm just saying, if you invested in the index, you'd be doing pretty well right now.
Absolutely.
Do you also know what the performance is versus the NASDAQ average?
Yeah, so I tracked the NASDAQ. I baselined the NASDAQ. So the NASDAQ closed at an all-time high on Friday as well, 14,836 and 99 cents. That's up 123.61% during the same time frame. So what you see, it's interesting when you look at the graph, which is embedded in the show notes for the segment. When the market's going strong, the index kind of outperforms the NASDAQ in general. It's an interesting phenomenon. So it's performing better. On the downside, though, it typically lags. So it has a little more price action. So it has a higher beta, if you're using an investment term, than the actual NASDAQ. So when it's up higher. When it's down, it's usually down a little lower than the NASDAQ. But yeah, definitely still performing extremely well against the NASDAQ. Quick summary. Revenue beat by 2.32%. So that's an average beat of revenue across the 25 stocks. Now that's down from last quarter. It was closer to like 5%, I think, beat. Same with earnings. Earnings only beat by 25.57% on average, which is down from last quarter. It was like 40%, right? So what you're seeing is you're starting to see a little tightening of expectations to performance in this quarter. And I think part of that is the analysts are starting to figure out how to evaluate some of these companies, because you have a lot of newer companies in this index, CrowdStrike, SailPoint, Ping. So they don't have a lot of history on how to rate or how to predict revenue and or earnings for these. And I think the analysts are starting to get a little better. So you're starting to see the beats tighten up a little bit, but there are some big misses too.
Is that a tell for the future, though? Is that a tell to kind of say that we're about to explode? I mean, are they really digging in right now, doing research, and because everything I'm seeing is that, especially with one of the topics we're going to talk about, Proofpoint, right? This is kind of a catalyst for what's to come. Everything that I've been reading. So is that a telltale sign?
Well, it's hard to say. Here's what I think is expectations will be more aligned, which is a good thing for the markets because you don't have large swings. But on the other side, when you look at some of these valuations, and we're going to talk about this with some of these IPOs, the valuations in this market are super, super strong. I mean, crazy strong. When you look at acquisitions that are happening, we'll talk about Proofpoint and ExtraHop. When you look at the IPOs for KnowBe4, Darktrace, and SSS, who was the other one? SentinelOne. I mean, holy cow, right? So I mean, I think expectations are good because that's less of a swing for the market. But I think what you've definitely seen is a lot more focus on this industry with a lot more upside potential, Jason. It's just kind of hard to understand how it's going to all come together and perform because in the public markets, we've seen some very interesting anomalies, is the way I'll say it, right? A company will go public. A couple years later, they get taken out and brought back private, right? Like a Proof Point, like an Imperva, like some of these other companies, right? They went public, took a round of money, and then somebody took them out of the public market and took them back private with huge valuations. So you don't always have to go public, as Extra Hop proved last quarter with a $900 million exit. They didn't have to go the IPO route to get a big valuation.
Right.
Yeah, and also Netscope recently saying that they don't really need it. Like they're fine on capital. They raised what they said is going to be their last private round. And yeah, they've been talking about IPOs, but I mean, if of course there's a measure of this that you have to take with a grain of salt because they're not going to tell you. But but it seemed pretty believable. When they say, yeah, we're just not in a rush to go IPO. And I think I've had this long running opinion, that one of these days there'll be enough data, to tell whether it's true or not. But, generally I think security companies do better public when the product is simple and doesn't, or at least the problem is simple and doesn't change often. So like identity management is a pretty stable space. But endpoint security, on the other hand, I think is pretty tough to go into a public market with because generally, public shareholders don't like a lot of change and risk. And sometimes in cybersecurity, to stay relevant, you got to tear up everything you've got and start over. You got to pivot. You do all this stuff that make shareholders very nervous.
You're right. No, that makes total sense.
Yeah. And you start to see this a little bit in the results. I want to get into some of the kind of best and worst during the quarter, right? So best rated, Verint, Varonis, Tenable, and CrowdStrike. I mean, these are names that have been there before.
Yep.
Verint and Varonis kind of came from really down to having turned themselves around a lot and kind of resetting expectations back to the analysts are figuring the market out. Worst rated, I mean, SecureWorks is been on this list quarter over quarter.
It's a staple on the list.
The analysts do not like the MSSP market for some reason. I think it probably has to do with profit margins, is my guess.
Yeah.
But man, this stock has just not been well rated for quarters on end. Qualys is here. Qualys, with Philippe's passing, some change of the guard. They're going through some stuff. I love what Qualys does. I mean, having worked there for almost 3 years, watching what they do from an innovation side, I like what they're doing. The analysts don't see it yet. So they've been on this list. Checkpoint is on this list again. Yep. Checkpoint has really struggled kind of breaking out of the firewall market. They've made a lot of acquisitions, but have they really put the right new messaging in place to drive the market? And NetScout showed up, as one of the worst rated on this list this time.
Yeah,
I mean, it's go ahead, Adrian.
Yeah, I was just going to say with SecureWorks, you do see them attempting to pivot. This scramble towards having more of a product presence. They've got an XDR offering now, and they have a vulnerability management offering now with the acquisition of Delve Labs. I'm not sure if they acquired somebody for the XDR piece, and then they've had Red Cloak for a while. They used internally, and kind of waffled around on whether or not to sell it as a product for several years, long before they were spun out as a public company. But yeah, it's interesting to see that, and then at the same time, you've got like who was it? Arctic Wolf has this crazy valuation that you don't normally see for MSPs.
Yeah, I was going to say the same thing about SecureWorks, about them diversifying, and it was a company. The XDR was an acquisition. It was Taegis, something like that. Taegis.
Yeah, they use that name for both of them, I think.
Yeah.
For all their products are called Taegis now. That's just like it's like Cortex for Palo Alto.
Yep. Got it.
Yep.
But I believe it was an acquisition. But I was going to say from an MSSP perspective, I've had lots of conversations with Arctic Wolf, and they deliver a lot differently, right, than a SecureWorks, and I think that's the differentiator. They follow, that kind of pod model where you have a pod of folks who understand your business, and they understand your needs, and they have a deeper relationship model than I think a SecureWorks does. So. I think that's where their value is coming from.
Clearly, something's working.
Yeah.
Right, for them. Yeah, absolutely true. I think there's another funding announcement. It was last quarter or this quarter. Mm-hmm. And when you look at some of the best, I mean, SecureWorks had a good quarter, don't get me wrong, but the analysts have dropped the expectations so low that eventually they had to have a good quarter, right? Mm-hmm. But then you see CyberArk, Tenable, and Zscaler. I mean, Zscaler's made a ton of acquisitions in the space, continue to grow. Ping and SailPoint were actually on the worst performer list. They've been traditionally some of the best performing stocks since they went IPO. They took a little breather, and again, it's probably analyst expectations grounded in reality for some of these earlier stage kind of into the market companies. Because again, Ping and SailPoint coming from the identity side, outside of CyberArk, you really didn't have anything to measure them against in the public markets.
And missing here that I find interesting is FireEye. Like there's just nothing to talk about with FireEye except the fact that now the company's been split up again.
Yeah. I mean, we will hit it in the key highlights, but to your point, they've never been on the worst performer or the best performer. They've always kind of been like right in that middle tier. They're performing, right? But when we get to the highlights here in a second on the public market, the spin out of their product segment to STG is a very interesting approach because you think about valuations for their second, right? Product has a higher valuation than services, for example. Why? Because you develop once and you sell it N times, where services have a tighter correlation to number of resources. So having FireEye as really going after the services side of the market is like, wow, how's that going to play out long term? We'll see, but it's an interesting approach because it's not one often taken.
Well, and what's interesting about that split is Mandiant they came into the relationship with some of the products and they're leaving with some of the products. So like the SOAR piece, I believe, leaves with Mandiant, what was CSG Invitas. And then FireEye keeps the stuff that's more prevention focused, the stuff that was built on the original, what was it called? MDS, I think was the technology for, finding interesting malware and stuff like that.
Got it. 3 IPOs last quarter. We kind of touched on them last quarter because KnowBe4 and Darktrace was right. They went right before we did the segment last quarter. So KnowBe4 hits the NASDAQ at a target price of 16, opened at 19.95, closed on Friday at 26.91. So I mean, almost a 2x, not quite, with a high of over $36 a share. Darktrace came out on the London Stock Exchange. Their target price was 250 pence, opened at 358 pence, closed on Friday at 692 pence, almost a 3xer on that one already for Darktrace, with its high actually at 787 pence, which is over 3 times its original target price as a high for a stock that's only been on the market for a few months. It's crazy valuations. And then SentinelOne went on June 30th, right before the end of the quarter. Target price at 35, opened at 46, closed Friday at 46.56 with a high of 54.05. So again, a good performance, but the valuation on SentinelOne at one point hit $10 billion for its opening on the opening day.
Oh my. Yeah. I mean, just looking at these 3, I looked at KnowBe4 because that was very, very interesting to me. And as I looked into them, they're very focused on annual reoccurring revenue, which I think is great because that's stickiness, right? And 2020 was 198.4 million in ARR. And on top of that, they don't have any net debt, which I think is absolutely amazing from an operational perspective, right? So very little debt, and very high annual reoccurring revenue. So stickiness with the customer.
Yeah. It's a great model to have, especially when you're public.
Yep.
Yeah, and just I need to correct my earlier statement with FireEye. It's not the SOAR piece that's going with Mandiant. It's the breach and attack simulation piece, Veridin.
Oh, got it. Axonius is planning an IPO yet this year. That came out as news. I don't know when they're going to come out. I didn't see a specific date, but it looks like they're prepping. We know Tanium's been prepping for a while. There's a couple others under the covers that are, Lumio took a big investment getting ready for IPO. So there's a few more lingering out there. Some other highlights that I thought were interesting. Dell spins off VMware, right? So they finished the spinoff. After the EMC acquisition, I think Dell owned 15 to 25% of VMware, something. I don't know what the exact number was. It was part of that EMC deal that happened. They spun off the rest of their shares in VMware. So now VMware, it doesn't have the Dell component. We talked about FireEye spinning off its products to STG. And then another really interesting thing for me was Splunk raised $1 billion from Silver Lake as a public company. That's a lot of money when you're in the public market. So Splunk's gonna do something soon with $1 billion purse behind them. They're gonna make some moves.
That's absolutely amazing. Yeah, I think the whole Dell VMware is interesting as well. I mean, Michael Dell still remains chairman of both sides, and at the end of the day, you're watching. So I'll say the folks at Dell are making out way better than VMware, because Dell's going to take that $9.5 billion and pay down a crap ton of debt, and then VMware is going to suck all that in and take it on. So the folks at Dell are making out, no doubt.
Yeah. Well, look. Go ahead, Adrian.
Be interesting to see what Splunk does, because I think the model works well. I think that's been proven out. But anytime you hear somebody talk about Splunk, and they still have a ton of customers, but usually it's some kind of complaint about the pricing, the expense of Splunk, to the point to where there's entire consultancies and companies just dedicated to helping you optimize your spend with Splunk, just like people optimize their spend with cloud vendors and stuff like that. And there's a whole market of folks that are like a tenth the cost of Splunk, that are aiming at their customers.
Yes. It's been a big pressure point for them for a long time, and it's not going away anytime soon. So they're going to have to make some moves to continue to innovate and continue to keep that customer base, because you got a bunch of ankle biters coming after them for sure. No doubt. Yeah,
you don't want to pull an HP or a Symantec. We've seen this story play out, man. Symantec, the whole next gen AV thing and EDR thing, they were so late to respond to that. There's no numbers, or maybe there are on. I don't know if they broke it down by endpoint in their public statements. But I heard rumors about how much they're losing every quarter, every month, and it was a landslide of revenue going out the door. Yeah,
not fun. Let's shift over to the private market for a little bit here to finish up this segment. Funding just stays strong. Like I said, I go through all the enterprise security weekly show notes for the last quarter to pull these numbers out. There is nothing under 20 million in here, because this list would be too long. The top 3 deals are $1 billion by themselves. Transmit Security, Acronis, and Illumio. That's $1 billion in just 3 deals.
I couldn't believe it when I looked at the Transmit Security information. Their pre-money valuation was $2.2 billion. Holy Lord.
and these are not acquisition prices. These are funding rounds.
Keep that in
mind, anybody listening. These are funding rounds that we're describing.
Funding rounds. I mean, just some big stuff. Exabeam's $200 million. Sysdig, $198 million. I mean, the number of 100 million plus deals this last quarter is just astonishing. It's crazy, the money that's out there.
And didn't they describe, wasn't the Transmit Security a Series A, like, to boot?
Yeah.
Like not only $500 million. Oh, it's a Series A. Of course, that's, if I recall, it was private equity backed. You don't see VC rounds get up nearly that high. Not
No,
yet.
you need a No, not yet. But I mean, there were some big. There was even a $50 million Series A. I mean, that's
Mhm.
still huge for Series A. $50 million, right? I mean, we used to see them back in the day. We were kind of 3 to 5 million. Then they kind of went 5 to 7 million. Then they ticked up to about 10, 11 million. 50 million just blows the doors off of an A. It's crazy.
Well, I mean, what you see now is you're seeing entrepreneurs and people who have been, kind of grown up with entrepreneurs, set out on their own and go after a corner of the market. That's pretty sizable. Like if you're coming out of the gate with a big, broad identity and access management play, you need a lot of funding, to attack that quickly, and especially if it's a growing market. And we see people coming out of Stripe and some of these huge companies that have had these huge exits and huge funding rounds, and they're capitalizing off of that momentum from the company that they're coming from. So in a lot of cases, it's almost more important. I'm not sure how interested the investors are in what they're currently doing as they were where they came from and how successful that organization was.
Yeah,
I'm sure it's a mix of both.
Probably. And you see some of the starting to play through in the acquisitions last quarter. So Extra Hop, we talked about at the top of the show. They've been a fantastic sponsor on the show. Congratulations to the team. But they skipped IPO. They went straight to an acquisition, a $900 million acquisition. Very interesting approach, right? Kind of skipping the IPO route. Could have gone probably IPO, but why put yourself in the public spotlight sometimes? So that was great. And then you see the activity. There's certain vendors here that you just have to realize they're making investments, they're making moves. Zscaler, another acquisition with TrustDome. Yep. ForcePoint made 2 acquisitions, Cyber Inc. and Deep Secure. Splunk made an acquisition. Microsoft did Refirm Labs, and what's not in this quarter because it happened after the fact is a Risk IQ acquisition by Microsoft. So think about that for a second, right? Microsoft's starting to make some moves in this space, which are really interesting, Adrian.
Yeah, big time. I mean, just so you guys know, I was at the partner conference last week. I went Tuesday, Wednesday, Thursday to Inspire. And I will tell you that they are literally weaving security into every single conversation, no matter what it is. Everything, whether it's, their cloud hosting, their collaboration, platforms, it's literally woven into everything to the point where they're starting to spin out vertical specific, Azure tenants and M365 tenants. So they can, you can focus, obviously they have their government cloud, but now they're starting to do nonprofit clouds and things of that nature. So they can tailor, the security and compliance strategies around it. It's absolutely amazing. It's woven into every single conversation that I was on.
Yeah, and last week they announced they just acquired or intent to acquire CloudKnox also, which is like a cloud governance, that kind of play.
And this is what the analysts have been waiting for a while. Like if Microsoft got serious about security and started down this path and started integrating it into O365 and Azure, does that change the dynamics of these point solutions in the market? Mm-hmm. The answer is absolutely yes, right? Of course it does. And now you're starting to see it.
Of course it does. I mean, think about it. Microsoft has owned identity for the longest time. I mean, Active Directory is identity, right? And now everything's up in Azure Active Directory, and they're just making a go at it and trying to own it all. And I mean, how can you start to compete if you're a startup identity management organization and Microsoft is putting all their capital behind building it out natively within their platform? You're going up against the behemoth.
Yeah. And it's interesting because the merger of Thycotic and Centrify also happened last quarter, even though we kind of touched on it before. But Centrify was a heavy Windows Active Directory play. Does that create some challenges for them going forward?
Right. personally, I'm going to say yes, because just knowing just the conversations and the extreme focus on making security top of mind and top of every single session. And again, it wasn't like I went and attended just security-based sessions. I went to their unified communication team sessions, and it was compliance and security woven into that. You know what I mean? So they're literally trying to push it in every single aspect of what they do.
It's when you see a company going in this direction, doing a bunch of acquisitions, building a lot of stuff internally, it's just like the public clouds. It's competing with them is a risk, and complementing them is also a risk. Because they can quickly make an acquisition, and what are people going to go with? The first party offering that's built into a subscription price, or a third party offering that maybe does a little bit more. It's a bit of a risk. So like we saw Tenable add their first new product in a while, which is an Active Directory product. And, that's one of those positions too. Microsoft can add that type of thing, and just make it completely free and built in. It's a risk.
Right. And the other very interesting point, Adrian and Matt, is they're very much focused on being vendor agnostic as well, because they're actually bringing in connectors to other third-party cloud services like Salesforce, where you can actually suck Salesforce data into your security and compliance suite and start doing, let's say you want to do a NIST level compliance scan of the information. They have a connector to Salesforce to do that. They have a connector to other like AWS and GCP. So you can start doing security and compliance evaluations of third-party cloud products. Their Sentinel SIM product, log sources from everywhere, right? It doesn't matter. It's more of a traditional type SIM product, but at the end of the day, if it's in the Microsoft stack, it's either highly discounted to bring it in as a log source or free, depending on where in the stack it is, right? So, they're making these very, very strong plays.
Yeah, they got bits and pieces of that SASE stack now. I don't think it makes sense for them to go full zero trust, because there's a lot of stuff that they don't play in at all, like networking. But they do have a CASB piece. They do have the SSO IAM piece. They do have some key pieces of that. And another big one they just announced is the Windows 365.
Yes.
Which is their desktop as a service offering. So now, kind of catching up and competing somewhat with the, VMware's, AWS, some of the other desktop as a service providers out there. And of course, everybody who's doing desktop as a service, it's all Windows, right?
Exactly.
So, when Microsoft comes out with their own,
and again, platform agnostic, right? I was in a session where I could bring up my Windows PC on my Android phone, and functioned pretty goddamn well. I'm not gonna lie. You know what I mean?
Yeah.
So
Paul all the time talks about his favorite browser in Linux is Edge. And just about everybody, most developers I know use Visual Studio Code, VS Code.
Yep.
Whether they're on a Mac or Linux or Windows, right? Like Microsoft made that step right. That was a smart move to stop bashing the competition and know thy enemy.
That's right. And it's funny because I start spinning my gears and thinking strategically, and it's like, all right, why wouldn't I want to bring Salesforce as a log connector, into or an app connector into M365, and then, hey, by the way, I can start showing you the deficiencies in Salesforce, so I can start selling you Dynamics, right? Or I can show you how much better integrated a Dynamics CRM is than a Salesforce into the entire stack, and it gives them the ability to start selling in different areas, because now those third parties are connected and deeply rooted into their stack.
It's going to be an interesting quarter to watch. I'll give you all the updates, in another 3 months or so. In the meantime, we're going to take a quick break and then cover the leadership and communications articles for this week.
Cyber risk and compliance automation is finally here. Legacy GRC systems cannot support the powerful, real-time automation and oversight that organizations require to take risks that matter to succeed. CyberSync continuous control automation ingests data from the IT GRC stack to update controls against regulatory requirements and risks in real time, delivering insights and visibility. See how members of the Fortune 500 are saving millions annually by visiting securityweekly.com/cybersync. Cybercriminals are using social engineering, loaded with urgency and fear, to successfully prey on victims, your employees, or your customers. Protect your Office 365 email from today's most sophisticated attacks with Barracuda Email Threat Scanner. It's a free tool to help protect your business from these hard-to-detect attacks. The Barracuda Email Threat Scanner uses artificial intelligence to hunt and eliminate Office 365 email threats. Find the cybersecurity threats hiding in your Office 365 email right now. Get your free email threat scan at securityweekly.com/Barracuda.
Welcome back to Business Security Weekly. I am your host, Matt Alderman, joined by Jason Albuquerque and Adrian Sanabria. Do you want to stay in the loop on all things Security Weekly? Visit securityweekly.com/subscribe to subscribe on your favorite podcast catcher or our YouTube channel. Sign up for our mailing list, join our Discord server, and follow us on our newest live streaming platform, Twitch. If you've missed any of our previously recorded webcasts or technical trainings, they are available for your viewing pleasure at securityweekly.com/on-demand. Those will come back right after Black Hat, folks. Don't worry. We got plenty more coming up after that hybrid event soon, a couple weeks away. All right, let's get into some articles. Jason, we missed you last week, so I tried to bring in a couple here that I can get your take on.
Sure.
I started with this. I started with some more around organizational and some management stuff. This first article from Harvard Business Review: big theatrical meetings are a waste of time. Yes,
100% agreed. It's funny, having been an executive leader for quite some time and seeing how some of these leadership meetings go, where you bring in staff and they give updates, and at the end of the day, I'm all about operational efficiency and effectiveness and outcomes of those meetings. We're not there to validate existence. We're there to get good outcomes, get good information, and make some good decisions. So fast, efficient, effective, and focused on outcomes is what I'm always about.
I love it when entire articles fit into the subject line, into the title.
Yeah, right. But it's funny, they can get out of control, right? If you're not managing expectations correctly, if you're not managing the meeting itself correctly, during that meeting itself, they can go down a rabbit hole. They can go off the rails big time, right? So there's a few things in here that I liked, right? Don't make it a bitch session. It's at the end of the day, we're not here to talk about the ills of the past, right? We're here to stay on agenda and talk about our future. So this isn't 3 hours of complaints. This is to make progress, right? Continuous improvement was the other one, right? So review your meetings in order to improve the next one. Absolutely. Right. If you're allowing it, or the meeting starts to go down a rabbit hole, think of ways you can do things differently next time.
We were talking about this morning because once a week the exec team gets together. It's a 1-hour call. We went a little over today because we were getting into some stuff. But one of the statements that came out of the meeting, we were talking about editorial calendars, and our chief editor owns pretty much our calendar, and she said something along the lines of, "Yeah, we used to have those really, really big meetings, but I'm much more efficient, and we get much more done when we kind of do these as kind of one-off." More one-on-one meetings, of course, because that's what happens. When you take, 10, 12 people, even for us, right, and pull them together in a meeting, they're not efficient, and it's a lot of wasted time. You're not getting a lot of stuff done. But if you're doing a couple of those meetings with the right people, you're a lot more productive, to the point of this article.
Yeah, absolutely. And the other side of it is there's a whole lot of money in that meeting. If you're looking at salaries and wages and that type of thing. So, just think about the spend at that point when you're sitting in a half a day, full day meeting. and then think about the outcomes that came out of it. Was it worth the amount of money that was spent?
Yeah, one
Usually
video.
not.
One of my favorite videos to share with people that was a big deal to me when I first saw it. It made a lot of things click for me. Why meetings tended to use up a lot of time and not get a whole lot done, whole lot of value out of it. But Jason Fried's TED Talk from 2008, going way back there, why work doesn't happen at work. And it's not just meetings, but a lot of it's about meetings. And that's one of the points he gets across is when you got 14 people in a 1 hour meeting, that's a 14-hour meeting. And when you look at things from like a consultant point of view, if those are consultants, they also have dollar figures attached to them. So you can very quickly and easily put a dollar figure on that meeting and say to yourself, okay, all these 14 people add their salaries together for that 1 hour. Was this meeting really worth $4,000? Like, did we get $4,000 out of this 1 hour meeting?
Yeah, absolutely. And then you throw in there, the people who show up late. So now the meeting has to go over because they're one of the key stakeholders, and the folks who are so damn busy not being engaged that they're heads down on their laptop, not even paying attention, or on their phone the entire meeting. And, that makes the meeting extend because you have to keep repeating things. And, it's being
and the distractors that take it down rabbit holes.
That's right.
And the purpose of the meeting, the goal of the meeting never gets met because they, take over the meeting, right?
That's right. That's right.
Exactly right. Usually not worth it. Article number 2, 2 ways to disconnect from work. I like number 2. I can never do number 1.
I was thinking the same thing, Matt. In no way, shape, or form can I mean, personal devices and work don't mix.
I was going to say the same thing.
Carry around a couple devices.
And I have a theory why, for me at least, I'm kind of obsessive about optimizing. Like you were talking about making meetings better and better. Like I tend to optimize my workflows and my devices and stuff like that. And it makes it really tough to separate out work and personal stuff after doing all that optimization. And honestly, with a lot of the stuff I do, I do a lot of community stuff. Like a lot of it mixes together, and it's like, well, I'm constantly pulling links over from this Slack into BSW or ESW. Like, where do I draw that line? Like at some point, it just becomes frustrating because now I'm trying to copy and paste from one computer to the other computer. I'm just going to sign into that Slack on this one.
I mean, at the end of the day, my work and my personal life are so in my community service, and it's just so intertwined. It is my personal life at the end of the day, right? I mean, I love my job. I love what I do. I love my community service. I love what I do. Obviously, I love my family and my personal life. So it's just all intertwined, and I manage it that way. It's just it's how I have to run, right? So I can't. There's no way I could separate the two. What I did find was in the article. I almost like the three items they called out on how you could achieve that, like establish boundaries, create some level of friction, right? And make small changes instead of trying to completely just go all in, and try to uproot your personal life and your work life and separate them and rip them apart. I like those rules of engagement better than, just kind of putting out there, no personal devices, no, and work don't mix. But for me, I think that's a good thing, right? Create a little bit of friction, right? So it's funny. My wife and I have this thing, and she calls me on it all the time. If I start going down the rabbit hole on my device, she'll knock, knock, knock. Hey, buddy, time to disengage and hang out with the fam.
That's why I think number 2 is better, even though I still only do a part of it. You figure out events at the start, mid, and end of your day. Now, I can do the start and the end pretty easily. The midday for me is so difficult because it depends on the day. I'm 2 hours behind the rest of my team, usually in most cases, right? So midday is really hard for me. But nothing happens before 8 a.m. from a meeting perspective because that's usually my coffee time and my catch up on yesterday's email time, right? Agreed. So I do have that kind of coffee before answers part of my day. And then there's a time in the afternoon where the wife wants her cocktail, and that's kind of like my hard stop, right? Yep. Yeah. And that might vary slightly by day, but it happens every day.
Right. No, agreed. I'm the same, right?
I can hit those too.
Coffee and cocktails. The bookends of the day. I love it.
Yeah.
The thing that kind of helped me here is I quit using over the course of the pandemic and when I started here at Security Weekly, CRA, I stopped using a laptop. I actually had an Intel NUC that I wasn't using, and I turned it into a desktop. So really, work happens in this one spot in my
That's
place.
your friction. You created friction.
Yeah, I actually didn't do that on purpose. I did it because I don't have a big desktop area. The NUC has a much smaller footprint, and it's a lot easier because every time you plug the laptop back in, like the monitors don't come up in the right arrangement. You got to fiddle with that. So it's honestly more convenient and makes it easier to log off at work.
Yeah. Yep, not me. Oh. Because I don't disconnect my devices from personal, so
right.
I get the knock. It's usually on my head, not on the table. Hey, stop that.
Yeah, I still have it on my iPad, my phone, and stuff like that. So to a limited degree, I'll get back. Like if there's a conversation on Slack, I'll get sucked into it.
Oh, funny. Next article, in modernization, security is a barrier and an incentive. And this is some research from IBM, and I think it solidifies some of the conversations we've had in the past. Tech refresh, the ability to refresh is an incentive from a security perspective. And I thought it just reinforced some of the other conversations we've had over the past, few weeks on this kind of modernization, tech debt discussion. Some of the research bears out some of the same.
Yeah, and they dug deep into the government, into the public sector as well, right? And some of the challenges that they have, and they're dead on. I spent some time in the public sector, and 60% of the folks that they interviewed think it's very important to modernize, but at the same time, they're like, we're afraid and we need to be trained. We don't have enough bandwidth, and there's all of these roadblocks that they're putting out there to not take that step forward to modernize, but at the end of the day, it's up to folks like us and consulting firms and business partners and things of that nature to kind of guide them through what that would look like, because there's a lot of fear of that change, and that's why they're not moving as fast as they probably should.
Yeah, that ties. Oh, go ahead, Adrian. Then I want to tie it to. I'm going to skip an article and go to more because it ties into the federal discussion.
Yeah.
Yeah, so I was just going to share a quick anecdote because I think part of the problem is understanding what modernization means. Like, how do you know you're moving forward, not backward? And back when I was a pen tester and a QSA at the same time, and for a long time, and really until I left, we did most of the PCI QSA work in spreadsheets. And we were going to modernize and move to a portal. I'm not going to mention the company who managed that portal, but we talked about them in the first segment as one of the companies not performing that well in public markets. But and they actually killed this portal shortly after we tried using it. But I remember trying to use it. It was going to manage all the evidence for PCI and just all the stuff you would normally put into folders and in the spreadsheet and stuff like that. Now went into the SaaS-based portal. And it was so bad, I told them, look, we're going to have to add another 20 hours to every PCI engagement, because this is so, that was something where they were thinking, oh, we're going to modernize this process.
Right.
But the workflow and the user experience was so terrible that it was a step back from using an Excel spreadsheet.
Yeah. And one of the folks interviewed in this article said it right. And it leads to that, right? Jumping into this without a plan, it's going to be a failure at the end of the day. Yep. So it's got to be well thought out. It's got to be well planned. It's got to be well tested, right? And make sure you're going in that right direction. But, I say it a lot here. No action is still an action. So, moving forward with a plan is way better than doing nothing. So do something, start that movement, start those conversations. Yeah. And if you don't know where to go, find a really good partner to work with and they can help.
Yeah, right. Failing is okay if you learn from it.
That's right.
But only if you learn from it.
Right.
Right. I skip because I want to go to Chris DeRusha's changes to FSMA because it ties in a little bit to the article we were just talking about. Because when you think about modernization, he talks about the cloud piece here, but he talks about some really interesting changes to FISMA requirements. And I think they're very interesting things to highlight. He says, first is we need to involve testing and validating security arrangements rather than relying on self-attestation by agencies. Hello, of course.
Yeah.
You want to know why we're not ready for all the ransomware that's out there? Is because we self-attested. We never validated our controls.
That's right. Self-assessments don't work. I mean, I wake up every morning, I look in the mirror, and I'm like, wow, you're beautiful, but I'm not. Not even close.
Then he talks
I think you're beautiful, Jason.
Oh, thank you. I appreciate that.
Then he talks about, using security automation. Again, hello, of course, right? It's like when you go to the DMV and you realize they're still doing everything manually. We could automate most of those jobs. It's not the government's best interest some days, but yeah, hello, when we're getting attacked like we are from these different nation states and all the things that are going on, yeah, we want some automation. I mean, he's thinking logically about how do we actually improve our federal systems and make them better. He's outlining some things that, hallelujah, finally somebody's bringing to the table.
The first one is the catalyst to all of it, though. Self-attestation needs to go away, right? I mean, seriously, I go to the doctor for a reason. Maybe I'm feeling great. Maybe I feel good every day, but I don't know what's going on. I want to make sure I'm a little bit proactive here. And I go see the doctor and he tells me, holy crap, dude, you have high blood pressure. You didn't know that? So it's like, that self-assessment is not going to work. And that if we start going to getting audited by an outside agency, it's going to start giving feedback and recommendations to, hey, increase security automation. Hey, migrate from legacy to the cloud. It's going to start giving those recommendations, and then they're going to be accountable for it.
Right. Exactly right.
Self-assessment works when the risk is so small that you don't really give a crap anyway, but you can at least say that, hey, we did something.
Yeah.
But beyond that,
think about all the exposure of our federal agencies over the years, right? And we were just, self-attestation. Why not? Of course. We're all good.
Does not work.
Yeah, I know. What also doesn't work is not training your engineers. Engineers need cybersecurity training too.
Right.
And I don't want this just from an engineering perspective, because we've been talking about this internally as Cyber Risk Alliance. Should we be doing basic cybersecurity training for all of our staff so they understand the market, they understand the challenges, we make them better stewards in the... Yes, of course we should, right? As a company, that's what we should do. And what I thought was interesting is, some of the things that companies should be asking themselves, because we're going through this right now, is how effective is our training? Are our employees well-versed in security? As a security company, we should be, right?
Absolutely. Everyone. But no, I mean, you're right. A lot of organizations become the quote-unquote cobbler's children, right? And they're so busy saying, I need to get my entire workforce trained, right? And make sure we're doing a level of end-user training for cybersecurity. But they forget about the actual cybersecurity professionals that are there, and that investment needs to happen. And I'm a firm believer, and it's something that I've always pushed with my teams, is that there should be a level. I look at it like around 20% of a person's time, within your organization should be spent in some level of training. Right? It could be a mix and a hybrid of, hey, 10% is on the job training. You're working with someone who has a little bit more skills and knowledge than you, but you're learning from them and you're taking on some of their tasks, right? And then 5% could be, let's say, product type training, where you're learning certain products within your environment that you use, and you're getting skilled there, and maybe some certifications. And then take another 5% on innovation, right? Start learning the best of breed, net new products that are hitting the market, or really that I'd call it more the R&D side, where you're doing research and development to hone in your skills. So it's got to be a mix, but you have to be focusing on those internal engineering resources as well.
Yeah, Jason, are there good sources that you're using right now for some of those training classes? Because I'm getting asked now by our new vice president of people, HR. Are there really good platforms out there that we should be looking at? Because again, we have multiple levels too, right? You've got event and salespeople all the way
Sure.
up to what Adrian's doing in the labs, right? And everywhere in between.
So here's what I'll say, and I won't name any product names, but you start looking at learning management systems that integrate with other third parties, right? So that can integrate with partners. So if you have a technology partner that you work with, let's say you're a Cisco shop or you're a Microsoft shop or you're a Fortinet shop, whatever the case may be, you can actually suck in they have APIs where you can connect and suck in some things from their learning centers, right? And then be able to pull in resources from multiple organizations. So that way you can have a holistic program that has a lot of diversity to it based on the needs, especially if you have a lot of different domain areas that you need to focus on and you need to train people on. And then that LMS system can handle it soup to nuts for the rest of the organization as well, right? So if your HR team needs training, it can connect into good HR resources to bring training in. And then you can start actually managing to it, because now you can manage the certifications there. You know when the certifications are going to come up. You can start planning for annual type trainings within there. Even good LMS systems, you can start doing your end user training out of there as well and have all that documented. But that's the key right there, is having a good comprehensive LMS. That's the hub, the center that has good API integrations to outside resources, so you can start sucking those things in. I mean, I've even had some organizations bring in, as part of their curriculum, and it's something that counts for them, a TED Talk, and make it part of their track and part of their curriculum, because they're sucking it in from the internet and making that one of the check boxes in their learning.
All right, since you won't name names on the show, I'll have to follow up with you afterward on something that might work for us.
Yes. So I can actually, my sister actually has a master's degree in this. I forget what the field is called, but this is what she does for companies. So I can ask her as well, Matt.
Yeah, it's just, we know there's some foundational stuff, so we're starting to do some research on, where are those right platforms, those right resources to leverage, so we can do a better job internally. We all get enough time doing the podcast and other stuff to stay up to speed on the latest and greatest, but not everybody has that opportunity like we do, because we're doing this every single week.
It's when you get to kind of the office stuff and the soft skills stuff, it would be an interesting perk at a company to have like a Skillshare or a Pluralsight subscription or something like that. Like I don't know, like there's stuff on writing, making your writing better, maybe making your AV setup for recording a podcast better, your lighting better. There's some interesting, just kind of general purpose stuff out there, and I'm shocked in a lot of organizations, like how many people don't know kind of like basic stuff in office applications that save them tons of time. Yeah. Like just basic stuff. Like you watch somebody use PowerPoint or Excel, and you try kind of bite your tongue, you're like, that could take you 10 minutes instead of an hour, right?
Yep. I've seen that in play. No comment. Last article we're going to cover today, the 8 top job pay salaries. This was it was interesting to me, because when you look at this, there's a lot of different titles in here, from architect and engineer to manager, director. You don't see a ton of variation. You get all the way down to the CISO. I'm like, Jason, I don't know that I want to be a CISO.
That's why I'm a chief operating officer now.
Because when you look at the average salary range of $188,260, and the pressure that's on you,
that's the key component right there, right? That's the key component, is the salary versus the responsibility and accountability that is on a CISO. I think the average salary is being undercut, no doubt about it.
And I think part of the reason for that average salary is I still see a lot of places that want to say they have a CISO. They want to bestow that title on someone.
CISO in name only?
Yeah, but it's they actually have 2 titles. They're director level, but they have an exec title. Right, exactly. and they actually, their actual title is Director of Information Security or Manager of Information Security. But because that's the highest level in the organization, they're like, Yeah, we'll just also call you a CISO and not pay
Right.
for it.
And I would, and this is just my guess, but when you look at the salary range and you have that upper level of 264, those are the CISOs who are embedded in the business. Those are the CISOs with the seat at the table, right? Those are the CISOs who are having the strategic conversations.
Yeah, and I think that's the important part here is to understand is if you want to get on the high side of that, you've got to be a business enabler. You got to be looked at as a business executive, not just a security practitioner or security, kind of focus expertise. Because when I bet as you compare these, and I'll see if I can find something. If I compare this CISO level to the COO and some of the other offices, my guess this is lower than some of the other ones because for that exact reason.
Yeah, and again, that was why I focused my career path, right? I focused my career path because I wanted to become that business executive. And, it started off as CISO, but then as I started making a name for myself and being able to be viewed as a business subject matter expert, a technology subject matter expert, I became CIO and CISO. And honestly, the only reason why the CISO stayed is because I asked for it to stay. I wanted that CISO title to stick around for a specific reason, right? We were an IT professional services organization and a managed services organization, and security needed to be top of mind. And I looked at it from an optics perspective, because if you were to go look up all of our executives and we had no CISO, that's a bad optic, right? Mm-hmm. So, I forced that to stay within my job title because I thought it was a good business strategy for us, right? I didn't want people looking at, I didn't want CEOs of our customers or CIOs of our customers looking at us and say, they don't even have a CISO, right?
Right. Yeah. And since all this data came from Glassdoor, I can go out and pull the other executive roles and I'll have to summarize it next time.
And once you get up to that,
to compare it.
Once you get up to that level, like compensation is not as simple as just a salary range.
No,
even some of these other roles here, and also it's not, once you get up to that business executive level, it's not as simple as just, taking another job. Like I know a lot of CISOs, some kind of complex negotiation and contracts go into play there. Mm-hmm. Like personal liability is a concern at that level.
Yeah, mm-hmm. Yeah, 100%. And again, when you're going in, you're not just negotiating that base salary. You're negotiating a compensation plan, a bonus plan, right? And then there's a lot there. There's a lot there that goes into this. So salary alone isn't always the only variable. So
you could almost put together a whole Pluralsight course on it, Jason. You could create that Pluralsight course. Get some passive income going.
There we go. And passive income.
Passive income is always good, especially on your tax returns. Gentlemen, thank you for joining me today. Thank you, everyone, for watching and listening. We'll see you next week on Business Security Weekly.